Welcome back. Up next, Forum Daily's market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, markets are moving higher today following a pullback yesterday, with major indices down by about 1% on average. That was yesterday. But we are seeing the markets moving higher, led by industrial metals, also precious metals, interestingly, with gold up by about 1.4%. You're also seeing energy stocks help to move the market higher as well. Crude is, however, trading a little bit lower, but that follows a 5% jump yesterday, so maybe just a little bit of a breather here. We're also seeing some strength in the semiconductor space today. I would, however, point out with the fear of rising rates, we are in fact seeing the home builders under some pressure. They are underperforming the broader market. There's, of course, concern about pressure on mortgage rates and mortgage applications. Stepping back for a moment, what's the market narrative going on right now? Well, it really is moving from the bullish story to the bearish story. So let's start with the bullish call being made right now. And that is that we've had oversold conditions. Remember that the market had pulled back by about 15 to 20% in bear market territory for some stocks and some indices. So with oversold conditions, the technicals were telling people to buy. So you did have a little bit of a buy the dip mentality going on over the past number of trading days. In fact, 6 out of 8 have been up. You've also got, of course, improving COVID trends. And on the bullish call, they're saying, look, we've got strong corporate as well as consumer balance sheets. Now, the bearish call, which is also very much front and center and very real, the concern, of course, is what happens next with Russia and Ukraine. Also, top of mind, will the U.S. Federal Reserve make a policy mistake by tightening too fast and causing a recession? And also, of course, look no further on that front than the yield curve in the United States. You're seeing the 2-year yield move higher, the 30-year-old not much movement there. In other words, the yield curve is kind of flattening. And we all know to look to the fixed income or bond investors to see what they believe will be the outcome of the US Fed tightening cycle. And right now, they're kind of indicating that they're pretty concerned that forward growth will, in fact, be slow and maybe there could be a recession. All of that, of course, is the bearish call. Add to that, of course, we've got high inflation stemming from the Ukraine-Russia war, of course, tight supply in the oil market, and fertilizer costs, the input costs that are also increasing, which will cause food costs to increase. Lastly, I just point out on the bearish call, think about deglobalization. We heard reports this week that Saudi Arabia is thinking to price oil not in US dollars, but in renminbi. Why would they do that? Two ideas and thoughts here. One is that they're not keen on the U.S. policies in their region, and also that the way the West and the democracies have treated the Russian oligarchs with a swipe of a pen, that they can freeze their assets and U.S. dollar assets, might make them want to move into renminbi. So that's a developing story. We'll watch that pretty closely. On the economic front, mixed data out of the United States today. Initial jobless claims fell to the lowest level since 1969, so that's obviously a positive. Manufacturing data beat, but durable goods was worse than expected. And it's important to keep in mind as well, Fed speak. And the U.S. Fed presidents that we've been hearing this week are all calling for probably about 7 rates this year. Away from that, we're continuing to keep our eyes on the Russia-Ukraine sanctions. I think we're going to hear a little bit more about that today with various meetings between President Biden and NATO. And then also, as we take a look at some stocks to watch as well, we are looking at Uber. They are adding New York taxis to their app. And KB Homes in the housing department, they did miss on their first quarter delivery. So a little bit of disappointing news there. Rounding out the picture here, take a look at the TSX. It is mildly higher today. Keep in mind, WTI is trading a little bit lower, as I mentioned. That can weigh on some of the stocks, but the energy sector is still an area where investors want to play. Canadian dollar is higher versus the US dollar. And on the 52-week high front, a couple names I wanted to point out. ARC Resources on the TSX, that's up 132%. Canadian Utilities up 15%. Precision Drilling up 241%. Again, past 52 weeks. And Stelco up by 125%, a Canadian steel company, which actually got upgraded to overweight from neutral over at JP Morgan. They are seeing some broad upside for steel companies, steel equities, and they've also actually raised the price of Stelco, the price target, to $62 from $48. So certainly a lot going on in the market, Nima. Most important, the price of oil and inflation expectations. I'll leave it there. Back to you.
Lots to keep our eyes out for. Catherine, thanks for that. That was Catherine Murray, host of the Buck Stops here. Be sure to tune into her show